Good evening. This is Doc Severson for the TheoNight Report for Tuesday, July 18th. Starting out tonight's video, I'm looking at the Nasdaq futures here, and another strong day after early weakness as we basically ramped all day long and ended up about 0.6% up, or about 38 handles for the day, challenging the all-time highs. So close, and with a fair amount of energy left in the charts to be able to assault those all-time highs. Now, here's the odd thing, though, when I look at markets across the board. When I go over here to Market Watch and look at the different indices here. So this is the Russell 3000. Here's the Russell 1000. Here's the S&P 500. Here's the weeklies. Here's the NYSE, etc., etc. What we're looking at here is overwhelmingly we're seeing markets, the same usual suspects are showing up here, Google and Facebook. A little bit of Johnson & Johnson showing up here, but Google and Facebook and Amazon, right? Google, Facebook, Amazon. Google, Facebook, Amazon. A little bit of BABA here. So what we're seeing is obviously the big caps, the big cap techs are really the only thing pushing the market up. Look at the rest of this is all universally just red everywhere. A little bit of green here and there, but it really doesn't matter when you have companies like PM or P&G working up. They just don't have the market cap to be able to push the market around. So obviously the market's being pushed around by these big cap techs. Well, no surprise, this has been the story for the better part of the last year, but this reminds me so much of 2015, where we saw the same exact thing again. So what gives me concern for this is, and this is a chart that I have from stockcharts.com, we can kind of see the same thing here happening. This is the NDX A200R, which is the Nasdaq 100% of stocks above the 200-day moving average. Now, the 200-day moving average is just an old school, very simple filter. Basically, anything above the 200-day moving average is generally in an uptrend. And that below the 200-day moving average is generally in a downtrend. And a 200-day moving average is a pretty serious trend. If it falls below the 200, that's not strong, right? So just being above the 200 doesn't necessarily mean anything, being that it's been so long since the S&P and the Nasdaq were anywhere near the 200-day moving average. So the fact that we have this divergence showing up here is especially important because we are, as you just saw, just about a hair's breadth away from punching into all-time highs, yet we have overall more and more stocks on the Nasdaq, which is by far the strongest index, falling below the 200-day moving average. And we've seen this since really the end of February, as markets kind of punched higher on the big event back then was the State of the Union address. And since that point, we've just continued to melt lower here. So what does that tell you? Well, what that tells you is that basically this market is continuing to just slide along on the edge of a razor blade, much like what it did back in 2015 before it saw some, let's call this range expansion, right? This is, even though this was a strong move to the downside in 2015, all this did was just expand the range into corrective action. And this is what concerns me here is that if let's say, for example, Facebook. If Facebook all of a sudden stumbles and has a problem here, this is a big deal because this will affect the market and it will actually cause contagion and just about everything else. If Amazon has a problem, this is going to be huge for the overall market. If Google has a problem, you can see that Google looks exactly like the Nasdaq chart up here. Same thing here. And they're just right now, the thing that is concerning is there's not a whole lot of energy on these charts as well, too. And we'll look at Apple here, but Apple really hasn't been the big answer lately. It hasn't been moving as much. So if there's any contagion, if there's any problem with any of these, and of course we know that we have earnings coming up here, there's just an enormous amount of risk as obviously great results are being priced into these earnings. So that begs the question, what do you do with a market like this? We have essentially no volatility. So we can look over here, the VIX or the volatility futures, whatever you want to look at here. Volatility futures are on the ground. We're hitting new lows in volatility futures. We're hitting new lows in the VIX, just crawling around in the gutter. So selling premium is just not a good idea right now because you will get run over. Either way, you could get run over on, just a runaway market to the upside. If you're selling call spreads, you can get run over on the eventual volatility that kicks in on put spreads. So this is just a really, really bad idea. Worse than just about any other time that I've seen with the amount of premium that's out there. So that leaves really two things. First of all, there's always intraday trading if you have the access to that. If you don't have the access to that, obviously it's more difficult. But intraday trading is actually fairly well structured right now. There's still enough movement intraday to offer opportunity for those of you that have the luxury of time or perhaps a better schedule, or even if you're just on the West Coast and 6:30 in the morning equates to your to the opening bell, and that works out for you. So that's one thing that's possible to do. The other thing that's possible to do is to be a net buyer of options and look for directional moves. Now, they are going to be smaller. The directional moves are going to be smaller. We're just not seeing these big breakout moves and big 100-point S&P breakouts and things like that anymore. The moves are contracting. They're getting smaller and smaller. So big consolidation here. This should have built up at least a 100-point move, and it's not done anything near that. So if the middle of this is around 2430 or so, we've managed to break out 30 whole points to the upside. Now, this is not necessarily done right now, but it's struggling. It's struggling to get anywhere right now. So all the breakouts are getting to be smaller and smaller and smaller. Eventually, this market has to expand its range to the downside, but it's fighting it every step of the way. So again, the answer comes back to, as goes Facebook, as goes Amazon, as goes Google, especially those three right now, and maybe soon Apple too. So goes the market, and the risk is definitely for any one of those. Losing it will cause a chain reaction. So the solution here, number one was intraday trading. Number two was looking for smaller swings. Smaller swings and smaller breakouts. So either dropping down in time frame, which was related to number one, or number two, looking for shorter. So if we use less time in our option positions, we can have more, there's more gamma. So the solution here is to keep the target small. So we can either do that one of two ways. We can either trade a smaller time frame, which again sort of goes back to that intraday thing again. But we can also look for smaller targets with this small IV, right? We're going to have small expected moves, which is going to be difficult if we have a longer term trade in place. So we don't want to be using like 30-day trades or anything like that. In most cases, a back week spread is going to be the answer to this. Hey folks, before you take off, just one quick reminder again about the Arizona Traders Retreat that we're having in Scottsdale in September 7th, 8th, and 9th. This is not to be missed again. If you've noticed here, we are actually starting to fill up. We are starting to fill up for this. If you go down to here, you can actually see who's signed up for this session already. So what's important about attending a workshop like this, if you're on the fence, is that not only do you get to meet us and ask us live the questions, you get to meet us during the breaks and ask us questions and get really answers to all of the issues that you've got, right? So not only that, but also the important thing is that there's going to be another 199 people out there that are doing exactly what you're doing. So not only meeting us, getting to see the material live, get your questions answered, but also meet this amazing group that we have put together, which is very, very quickly approaching sold out status. So keep that in mind. Now, don't forget that if you're not a Total Theo member, your attendance to this workshop will include 1 year of Total Theo. Now, if you don't know what Total Theo is or what that's all about, first of all, there's a live element to it. We're basically live about 6 hours a day through video and audio in the chat room itself, as well as you can see all the archives that we have for every month that we've done this, but also the classes that we do. So we can look at some of the classes that we have done live for our students. So in other words, if you want to know about iron condors or high probability in-out spreads or weekly options or calendar spreads or fractal energy trading or trading a small account or doing weekly diagonal spreads, pairs trading, trading futures contracts, using fibs in your trading, trading tetrapod spreads, you name it, we have done a class in it over the last couple of years. These will all be available to you as soon as you sign up for this class. Now, the workshop itself features our favorite material and the material that's most requested by our students, such as long and short volatility strategies, neutral options trading strategies, including pairs, calendars, straddles, strangles, how to set it up in a workable portfolio, how to position size, how to work on your mindset, and how to add technical analysis to increase the probabilities of your trading, how to build a trading plan, and a proven formula for day trading as well too. You name it, just about every aspect of trading, whether it's stocks, options, futures, building a portfolio, being able to day trade, being able to trade for a living is something that we're going to be talking about during this 2-day class. And of course, it does come with the Total Theo 12-month membership. And to give you an idea what the event schedule is like, first of all, on Thursday night, the 7th, we're going to be having a happy hour with you guys. So meeting everybody in person, you're going to get a chance to, rub elbows with not only the instructors out there, but other expert traders that are part of our live trading room every single day. And on Friday and Saturday, we're going to be doing, of course, morning session, afternoon session, and breakfast is served for those of staying in the hotel. You can see the conference room we're going to be doing this at. One thing I'd like to point out to you is if you've been through seminars like this before, sometimes we wedge everybody into these things, and it's so uncomfortable. By the end of 2 days, you're ready to go. We're going to have nice chairs for you guys, so we're going to make you very, very comfortable. It's going to be an excellent facility. You can see how beautiful this place is, and you're going to want to stay around for maybe a couple of days after that, maybe extend your stay into the weekend. This is such a nice place. So full day Friday, full day Saturday, rubbing elbows with us, talking to us about questions that you have for trading as well. Full breakfast, lunch, cocktail party, discount, TheoTrade group room rate, Wi-Fi resort fee is going to be waived for those staying at the hotel, discount on spa services. You can go play golf out there. This is going to be a great event. It's going to be a high-class event, and it's going to be absolutely packed with information. The ability to talk to our instructors out there and really walk away with a full trading plan and give you confidence to be able to hit this market running when it starts again in the most important part of the year, which is the beginning of the fourth quarter here as we wrap up 2017. So hope to see you out there.